attendees are in listen-only mode.
Good afternoon, everyone. As we proceed towards this month end, this is one of the last webinar for the month. Stock market opportunities with midterm holding counters, which can be discussed. We welcome you to Epic Learning Center. This particular webinar focuses on the opportunities that are there in the market, in stock market, related to holding of particular counters over a period of time. Over a period of time, we have seen many potential counters which are giving exceptional return of 50% to 60% on weekly basis, though on trading session in 5 to 4 days, they are also generating returns of around 10 to 20%. This are midterm holding counters which we will discuss today. We at Epic Learning Center are having regular webinars. We do webinars on weekly basis on Mondays or Wednesdays, and these webinars basically focuses on sharing the dynamics of the market, sharing the knowledge, sharing the information related to the main index and some counters. I'll give you all the details on the index and stocks on charts, live charts, and then take you through index and both charts and give you through a midterm view of those particular counters. About Epic Research, we are a private limited company. So we are SEBI registered, having been awarded and rated by NSIC. D&B Leadership Excellence Award have been awarded to us due to our credibility amongst clients and traders across the globe. We have our presence in India, the States, Australia and Middle East economies with over 15,000 satisfied customers and around 80% accurate trading calls. We provide need-based expert advice in many domains. These domains include equities, commodities, COMEX, international commodity market, currency, Indian and international Forex, premium research reports also we provide. This can be intraday, over a period of time, positional, midterm, long-term holdings as well, corporate research solutions. We have been backing up research for some of the top broking house for the country. Fundamental research, international markets, including Singapore Exchange, KLSE, Shanghai, Hong Kong, and right now we are also foraying into LSE and NYSE. Now we'll be coming to charts, and this is the workspace if you can see, and if you look at these are some of the counters which we have identified for you, but many of them we will have to filter, because if you see many counters over here have already been giving exceptional return like 15% to 16% rallies, but are we able to catch them at the right time? So these are some of the counters. While we go through the index, This is a straight stamps index. If you see, it's a weekly chart. After a sharp, downfall, you can say. Now, if you see, there has been a correction on these chart. Now, if you look at candlestick, line chart, we might have completed 5 way. You can label it 1, 2, 3, 4, 5, A, B, C. While we are in a short-term correction, and this is the daily chart. So we are looking for an ABC pattern, and currently as well, if you look at a weekly chart, it is expected to rebound to 2760 to 2750 because we have seen a fair amount of rally from 2540 to almost 2900 levels. Now, even if you have to look for ABC, we might have to correct 50 to 40 points odd from here. Even if you try to analyze it with Fibonacci on line charts, see how beautifully it has resistance at 38.2% or 2915. We are heading towards 2765, which will act as a support. Previously as well, if you look at the charts simply on the basis of support and resistance, 2760, 2750 has been the area of demand in the past, and it will be now as well. So you will have to look at the line chart as well for finding the support and resistance. If you look at Fibonacci, 38.2% of this particular downfall from 3500 to 2550 has been achieved. Now we are into a retracement zone, so 23.6% will actually help us as a kind of a support. So this is, you can see in candlestick chart, see there is a double bottom formation as well at 2735. So currently at these levels, 2760, 2761, I think the prices are going for these levels. Then we may see again a rebound, and the prices may test 3000 levels and 3150, but that will be the next TP from here. But you have to see these levels and trade them accordingly. This is on a weekly chart. On the daily chart, you might see some kind of volatility in coming week, though. See, this is the kind of, now this is a rounding bottom. You can see on the chart, you can see this is the rounding bottom. This is the left shoulder, and prices have seen this price, and we might be going for a right shoulder, and then we might see again prices bounce back. So this is straight stamps index. Now coming on to specific counters, first of the counter we'll discuss is OKH Global. We have been recommending this counter for over a period of time in our intraday and daily services as well. We got this counter at a very attractive price at 0.85, 0.89. Why? Because there was a gap down. Along with this counter was giving a bottom reversal signal. If you see, the RSI was oversold, and it somewhat gave a reversal at this point of time when there was a divergence. Even if you see at stochastic, which has been fast, and if you see the blue line, how beautifully it has given a crossover above the red line, and still it is a buy. We was happen to give this signal in midterm services as well at 0.9 to 0.90 level. That's almost an exceptional gain of 50% from here, as stocks have already seen 140. So currently as well, uh, these counters have a huge potential. We might see this counter because RSI is still way oversold, along with the stochastic volume has been good as well. So on daily and weekly basis as well, this counter is good. Even if we have a closing above 0.1, 26, we may see this counter coming back to 0.177 in the near term. Though I will say on the downside 0.125, 126 is a good support. So you have to trade as per the levels. Second counter is we have been recommending as ward holdings. We have recommended it in intraday as well. It's a kind of a bottom reversal peak on the chart. If you see, it has been in a long term downward momentum. There is nothing much impressive on the chart, but on the daily chart, if you see, it has breached is uh, falling wedge pattern where the prices were making steeper highs while the lows were still being matched. So currently it has given a breakout above this channel. We have got this counter at 0.140, currently coming at 0.205. This particular counter, if you see, has been in a kind of a flag pattern breakout. Now if you see the pole of this flag from 0.240 to 0.130 is the pole. A closing above 0.215220 will take this counter towards 0.285 to 0.29. It is one of the midterm holdings that you should look at. The risk reward is very favorable in this counter, and over a period of time RSI is also been in a sideways range along with the stochastic. So you need to understand that this is a flag pattern breakout above 0.220. Buying setup is there. RSI is comfortable at 58. Stochastic at 42 is also comfortable. Buying momentum is seen. If you see kind of accumulation we have seen over in this area, in this and currently as well, volume has been averagely higher on the daily basis. So you can go long above in VARD as well. The risk reward is very favorable. On the downside 0.180 is our stop loss, while 0.295 is our target. So it's almost 1:3. While your risk is 1, the reward is 3. These are the two counters I have discussed about Singapore exchange. Third counter, last but not the least, SPACman, have been on our radar since we got it at 0.090. These levels we have been recommending it to our clients in intraday and positional and midterm basis. Currently as well, see if you look at this particular counter on a weekly basis, it has ended its long-term downward momentum. You see, there was, if I clearly show you, there was lower lows, higher lower tops being made. The trend has now been changed, and currently if you look at the daily chart, the counter has been in a consolidation range overall of 0.150 to 0.125. We expect this counter to make a new high at around 0.165 over a period of time, simply on the basis of a higher top higher bottom formation. This particular counter is in a kind of a price pattern, so a reversal from these level is evident on the charts. 0.125 is a very good support in the short term. A closing above 0.137 will take prices towards 0.154. Above this counter on the weekly chart we will have to see will having a strong resistance at 0.170. Breaching of these levels, it may get back to its previous zones of around 0.230. Wired holding is a very beautiful counter. The moves on the weekly chart, if you see, a continuous moves have been there on the weekly chart as well. I delete these trend lines for your convenience. I draw again to show you a flag pattern over here, kind of a flag pattern. So if you can see, this is also a nice setup above 0.137 on a weekly closing basis. You may see a good move in WARD as well, SPACman as well. So these are the three counters. SPACman for a higher target of 0.160 with a stop loss at 0.125. OKH global as well above 0.137 on a weekly basis. We may see 0.165170 on the downside. 125 is our stop loss. WARD, it's a flag pattern breakout. 180 will be the stop loss in the near term, while 295 will be the target in the mid term. These are the three counters Now I will take you towards FD, FBM, KLCI, the spot index of Bursa Malaysia. This is the weekly chart. Last week, as we had a red candle, so we had a negative opening for the uh, week, but market has covered. If you see, global markets were positive but are now in red, along with Asian indices in. If you look at this, we have been getting negative signals, and this is the kind of negative indexes on the Asian front. Emerging markets, these are the American market, which closed positive on the Thursday before Good Friday, but are expected to open negative as like European markets have been down since morning. So coming back to FT, FBM, KLCI, the opening was negative. Market managed to survive, but it is still a sell-on rise. 1720, 15 are kind of a supply zone in the market. Now, if you look at, this is the trend resistance line, and we have been getting a sell signal along with RSI on the daily chart has been reversed, stochastic as well. So it's a sell on rise for now. We may see a kind of a correction towards 1675, 1670 level in the short term. Sell on rise will be the strategy, but anytime market is going down, you need to understand there are stock specific counters which give good amount of return. Some of the counters which have been going against the market but are giving good and over a period of time plus 10 to 20% return, and one of the counters is bio alpha holding. We have been suggesting this counter every time this counter is making higher highs. You need to understand this is a kind of a counter which is make higher high, higher lows on the chart with some kind of a consolidation. Anytime there is a push in the volume on the domestic front as well, many houses are in Malaysia are overweight on this counter. This has been in overall buying momentum. This was the support it has formed, and from 285 it has been up. On the weekly chart, there is not much to see, but it has resistance at 0.445. This is a weekly level, but if you see the involvement of traders and the volume has been good. So currently it's a flag pattern breakout. We may see above 0.445 this counter breaching its all-time high 0.480 and then moving on to uncharted territory. So that can be a different aspect for this particular counter. But yes, on the downside, 0.400 is now a good support. On the weekly chart, RSI is having a good amount of volume. RSI is having good amount of volume, and and RSI is also at 88, but it is making higher highs with good amount of volume. So there is not much to be cautious about on this counter. But yes, 0.400 is now a good support. So you must understand this is a weekly setup. This is a midterm call. So on the downside, a stop loss can be put at 0.380. If it manages to close tomorrow above 0.445, we may see this counter making new 52-week high in coming trading sessions. So it's a buy on dips counter. You must keep it on your radar. Any push in the volume in this counter will take prices towards higher level. Now this is one of the mid cap counters, almost crossed from penny to coming to mid cap, and currently in a higher high, higher bottom formation. We have recommended this counter in last few trading sessions, though it was in a consolidation zone over here, and this particular zone was overdue correction for this particular counter, but for now it has regained its consolidation. The volume was dry as well. Now we have seen a pickup in the volume. Counter is being pushed by many uh, houses, and the volume has been much participating, though it is now reversing from 2.40 levels. So currently we expect this to continue, and we think that any close about 2.800 in this counter will take prices higher. Now this is a daily chart, so you might not get easily convinced, so I'll put a weekly chart over for you. Now this is the weekly chart, and it has retraced its previous candle by almost 61.8%. So we are reiterate its basic trend, which was higher top higher bottom formation on the weekly front for now. And so this is the resistance level. So we may get this counter towards 3.150, 3.140 level. On the downside, 2.350 is a very nice support. We have seen it has acted as a support in the past. If you see, these are some of the pullbacks for this counter. Currently, it was a polarity of the candlestick which was acting as a resistance, but now it is now support. So we may see this counter pushing towards 3.1 in coming period of time. I'll repeat the name of this counter: P metal, PMETAL, press metal BHD is a complete name. The code is 8869 for this counter. It's a nice chart overall. The volume participation has been there. Now we have seen a drop in the volume participation on the weekly chart last week, but there was a red candle. Volume was dry, so it might be a kind of a consolidation and overdue correction in this counter. So the retire rate of its initial trend is there. We may see it moving towards the next wave to 3.100, which will be its third impulse wave. Last but not the least, AirAsia. Recent news has been there that one of the top holders, Ratan Tata, from the India itself, having its holding at 41%, will raise it to 49% in coming over of time, due to overall profitability of this company, not just on the domestic but international front as well, due to Chinese New Year last month, and overall operational efficiency due to lower crude oil prices, and competency in uh, price war against other airlines. This counter is fundamentally sounding very good over a period of time. It's a kind of a bottom reversal on the weekly chart that has been seen, and if you see, the next level for AirAsia on the weekly chart is 2.180. So that's over a period of time for a 2 to 3 weeks call. But for now, you can understand that this counter is very good on the buying front. We may see a breakout. We have seen a breakout of daily consolidation range of 1.800 to 1.720. It today also on the daily basis has given a breakout, and the next resistance in this particular counter is at 2.170. RSI is also comfortable. We have seen RSI giving divergence, but prices are ignoring the overall indicator, leading indicator like RSI, while volume is seeing a good push up. So it's a good overall counter. The setup is good, and if you see on the weekly chart as well, the next resistance come at 2.170. So one should be able to take a long-term mid-term view on this counter, and the target would be 2.150. On the short term, 1.620, 1.640 is a good support. So one can put their stop loss on this place and have a mid-term view for a higher target of 2.150. This is the three counters: press metal, AirAsia, which we have discussed, and last but not the least, bio holding. This one 0.440, and you see this is the last resistance, and above this there is no resistance. In Singapore exchange, we have discussed Specman for higher targets at 0.160 to 165. OKH Global as well for the same targets. Weekly setup is there. And last but not the least, ward for a higher potential target of 0.285 to 295. These are some of the counters, 6 counters with our view on SGX and KLSE. And KLSE. And if you have any queries related to the counters, you can tell me. We'll take it ahead by discussing each and every counter. Since I have the opportunity that many people are here, I'll discuss the FCPO as well. If anyone wants to hedge their position, we have been discussing it with some of the premium clients we have who are paying us a healthy amount for a healthy profit. So this is one of the strategies when you have a downward momentum in the FKLI index, or your portfolio is churning out less return in the equity, you should move on to commodities to hedge your position and look for a buying setup. We have been recommending FCPO buying around 2650 on a positional basis. Today as well we have been we recommended at 2740, and it gave us a return of almost 15 ringgit. uh, so that's a good amount of profit. This is kind of a hedging strategy, and right now as well it is going for higher targets at 2861. How you can you utilize your portfolio and churn out the best possible result from overall hedging by equity to commodity market, or if you have a position in some of the counter which is not making profit but you have good amount of brokerage, you have a good amount of portfolio, so you can put some of the investment in the FCPO. Now what are the levels, how you can invest, how you can churn out the best return, you can contact us at Epic Research. We'll be happy to help you. These are some of the websites and updates which you can see: www.epicresearch.sg for our Singapore clients and www.epicresearch.my for our Malaysian clients. You can see reports as well on daily basis with some of the recommendations. Now I'll be happy to take your queries. These are the numbers: +6531 581 402 +6603 502 19047. You can note them down, and if you have any queries you can ask me one by one. I'll be happy to answer your queries. Okay, this is a very beautiful counter. It's a nice question. Anzo Holdings have seen a beautiful rally from 125 to almost 360 Singapore dollar, sorry, Malaysian ringgit. And this particular counter, even if you look at a 38.2 to 61.8 or even a 50% correction, you're looking at somewhat dollar 0.200 MYR. So in the short term, we are negative on Enzo. You may see it may see a kind of correction. Any closing below 0.260 will take prices towards 0.210. So it's a negative for Enzo. Another query is for Zinquan International Sports Holding. This counter is coming at 0.270. Now I don't know if you are having any holding. This is just a bottom reversal, but that also we don't have any confirmation. Only on the RSI side we are seeing some kind of a divergence. That too is not sure. This counter is positive only above 0.295, 0.300. Only above that, until unless it doesn't breach or close above this, we cannot expect this counter to outperform and regain back its strength. The volume has been on the daily chart increasing, so closing above 0.320310 is needed. It's a buy, but only above 0.310 with a stop loss at 0.250 for a higher target of 0.400. Well, this is Loveless Sharma from the Epic Research, Singapore and Malaysia. If you have any more queries, we'll be taking it. Apart from that, you can mail it to research@epicresearch.sg or research@epicresearch.my. We'll be happy to answer your queries over there. You can share your portfolio, your holdings as well. We'll be happy to answer and rejig your portfolio and revamp it up for a better profitability. I hope you have a happy trading session this week. Myself, Loveless Sharma, I'll be taking your leave. Have a happy evening and happy trading sessions.